Hello and welcome to GFO
Recording in progress.
Gaffer Plus subscriber webinar for April. And I am Michelle Mark Levine, Director of Technical Services here at GFOA, and understudying today for Todd Bikema, who is usually the star of this show. I'm here today with Susanna Filipovich, who's going to be answering questions in the background while we go through. So if you have any questions, please put them through the question and answer function here in Zoom, and she will be answering them in the background. She might jump in either at the end or at a breaking point if she has some questions that she wants to run by the whole group. So this is, as usual, a 1 CPE session. It is worth 1 continuing professional education, but in order to get that credit, you need to meet both the attendance and the participation requirements that the National Association of State Boards of Accountancy gives us, which means that you must be here, so stay in this Zoom room for at least 50 minutes. And you also need to prove your participation by answering CPE verification polls. Those will pop up at random times during the presentation. I will let you know when I see them. You will have 90 seconds from the time that they pop up, and you are responsible for making sure that you are watching for them. They're very easy, yes or no questions. There's not a lot of thought involved because, frankly, you can answer either yes or no, and you will get credit. Once the participation and attendance has been verified, which it could be a few business days, then we will send you, or the GFOA's learning management system, we will send you an invitation to log back into the learning management system. That's basically how you got into this session today, right? And to fill out an evaluation of the session, give us any suggestions, feedback, especially if you have ideas of how to improve these or topics you'd like to see. Then once you submit that evaluation, you will be able to download your continuing professional education certificate. All right. So today we are talking about a preliminary views document. And it's on what GASB is calling severe financial stress and probable dissolution disclosures. So first thing to notice is that this is a preliminary views, right? And the second thing to notice is that this is about disclosures. So none of what is being proposed has anything to do with recognition or measurement in the financial statements. So what exactly is a preliminary views document? Well, this is an early stage due process document, meaning GASB is coming to the public, to us, to ask what we think about their initial planning, if you will, how they plan to approach an accounting issue. And it explains a lot of background as to why they have engaged in this project, what they are hoping to accomplish, and it also goes through and gives a pretty thorough explanation of why. So if you think about GASB's exposure drafts and their actual final pronouncements, right, those can be a little bit hard to read because they're a little bit legalistic, and all of the explanation about what they're trying to accomplish and why they've made certain decisions is back in appendices at the end of the book. Right, so the background and what they call their basis for conclusions is all sort of separated from the actual substance of the rule. Well, here in a preliminary views document, as you'll see when we look at the table of contents for the document, they arrange this in chapters. And each chapter contains both what their preliminary plan is, what they think that they're going to require, as well as a thorough explanation of how they reached those conclusions. It's one of the most approachable types of documents that GASB issues because it is kind of plain language, easy reading with the background information up front, and then all the rationale behind their tentative decisions laid out for you. This is an opportunity for us, for really anybody, but certainly the accounting, the preparer, and the auditor communities, to give GASB feedback before it's too late, right? Often people feel like when they're looking at an exposure draft that, all the decisions have been made, that it's very unlikely that they're going to be able to sway GASB. Well, that is not the case when we're talking about a preliminary reviews document. This is really where they are looking for feedback. They're especially looking for people to raise issues or concerns that they may not have even thought about or may not have given adequate consideration to, because frankly, as practitioners, we may know more than they do about specific issues. This feedback, the comments that they get, is going to inform what they put into an exposure draft, assuming that the project moves forward, right? It's conceivable that we could give them so much information contrary that they could decide that this project isn't necessary or isn't a good idea. But for the most part, the feedback that we give them has a best chance of altering what they actually propose in an exposure draft and what goes into a final statement. So this is just a list of some of the acronyms you will see throughout today's presentation: the American Institute of Certified Public Accountants, or AICPA, the Governmental Accounting Standards Board, I've already been saying GASB. GCU is a term that GASB has coined that says going concern uncertainty. Actually, that may have been a previous term that auditors have used in the past. Also, there's a GCO, or a going concern opinion, and that is when independent auditors actually raise questions in their opinion about whether the entity is going to be able to continue as what we call a going concern. So that is a not very frequent occurrence, but that is actually the result of applying the current guidance, at least as people interpret it. For PD, or probable dissolution, this is a new term that GASB is proposing, essentially, to address the issue that sometimes governments go out of business. And they could go out of business as a result of financial stress, or they could go out of business for other reasons. And probable dissolution is not necessarily tied to financial stress. Preliminary reviews, I already talked about, that's this document, and severe financial stress, or SFS, you will see throughout this presentation. Just to give you a hint, currently the guidance that governments follow in their disclosures, which is also pretty similar to what auditors follow when they're determining if they need to give a going concern opinion, is in GASB's codification section 2250, and that came from GASB's statement 56, which was a codification of a slew of old AICPA statements on auditing standards that actually contained accounting guidance. Now, it's very important to remember that this current guidance was adopted from the private sector. And notice I say adopted, not adapted, because GASB didn't actually do anything substantive to adapt this private sector guidance to be appropriate for governments. And that's, as we see when we talk about the research that GASB did, that really is a problem, because a lot of the language and the understanding that pertains to private sector doesn't apply in the same way to governments. The current guidance assumes that there is a cause and effect relationship between governments being in severe financial stress and the possibility that they may not be able to continue as an ongoing entity. And theoretically, a going concern uncertainty could actually raise to the level of an entity needing to use what is called liquidation accounting, right? So if you think about, probably one of the first things you learned if you ever took an accounting class is the idea that there's this foundational assumption in accounting and financial reporting that basically the entity that you're reporting for will continue, that it'll be ongoing, that it doesn't have an expiration date or an end date. And that's what allows us to do things like record assets, right, based on something other than what we could sell them for, or liabilities being measured, in accordance with what the amount we borrowed was, and perhaps accrued liabilities, right, accrued interest for long-term liabilities, payables, et cetera, for shorter-term liabilities, rather than looking at, what we would need to pay to settle them immediately, right, or to pay a third party to assume them for us. And of course, things like deferred resource flows, right? Deferred inflows and outflows of resources. I know most folks hate those because they are unique to government. Well, they would make no sense at all if we were assuming that the government was about to go out of business, right? And other things like depreciation and other attempts to sort of match the costs of providing goods and services with the periods in which we actually provide those goods and services. That is, that is going to be something that doesn't really matter if you're not expecting to continue going. And so the fundamental principle of really all of our accounting and financial reporting is the idea that we have a going entity. And if that's not the case, then folks need to know, and in theory, all of our accounting would change. So this is actually a snippet right from the table of contents. Is actually the full table of contents, except for an introduction of the preliminary views document. And again, you can see that these are in chapters, and each chapter is very readable because it explains exactly what our first certification poll is up. So if you want CPE credit, please go ahead and answer this. Yes or no, are you there? Let us know so we can give you CPE credit. You can see the arrangement of the chapters. The first chapter is just background and telling you what they're trying to accomplish. And we'll talk a little bit about that and some of the research that was done up front. And then they talk about defining and distinguishing between severe financial stress and probable dissolution. And then chapters 3 and 4 look at severe financial stress, both in terms of how you identify if a government is in that condition and also what disclosures you would do in that case. And then the last two chapters, 5 and 6, are about probable dissolution, how you would identify if it is probable that a government is going to dissolve, and also what those disclosures would look like if that's the case. So chapter 1 talks about the background, the objective of the project. So this is where GASB sort of sets out what they were trying to do when they undertook this project. And specifically, they're looking at, how should the existing going concern uncertainty definition be clarified to reduce what they observed as a significant diversity in practice, meaning that governments and auditors seem to interpret the existing guidance very differently. And so we get inconsistencies about under what circumstances, if ever, we would get a going concern audit opinion or going concern disclosures by preparers. Also, what constitutes severe financial stress, and is it different than having going concern uncertainties? Also, what are the indicators? How do we know when a government is in severe financial stress? And are there specific indicators that we can use to evaluate whether a government is in that condition? And also, what relevant information should be disclosed if a government is in severe financial stress? You'll notice that the original objectives of this didn't really get at probable disclosure, but that second bullet, right, should severe financial stress be distinguished from going concern uncertainties, really is how we got to the idea of probable dissolution. A little bit about the history. GASB actually started this project way back 10 years ago in April of 2015. They spent a good bit of time doing initial research, what they call pre-agenda research. Based on that pre-agenda research, there was a project prospectus that went to the board, and they decided to add the project to their technical agenda, the formal list, if you will, of projects that they are actively discussing with board members, where decisions are being made, where they are undertaking due process, such as this, in order to move forward with potential changes to GAAP. And finally, the board actually began deliberations in July of 2022. Now, I do want to point out, if my memory is correct, that this is actually a project that GASB spent a lot of time, specifically the time of their postgraduate technical assistants. These are people who graduate from college with accounting degrees, and before they move on to whatever their next career phase is going to be, they spend a year with the Governmental Accounting Standards Board. The Financial Accounting Standards Board has a similar program, right? And they do work for GASB. And I think that a lot of those PTAs spent a lot of time keying data in from ACFRs because they were trying to do a statistical analysis to see if they could find statistically valid, reliable indicators of either governments needing to dissolve or of severe financial stress. And my understanding is that that was not a very successful effort. So the research, let's talk a little bit about some of the highlights from GASB's pre-agenda research. So this was in the time between when they considered the project back in April of 2015 and the time that they actually put it onto their technical agenda. So they were looking to figure out whether going concern indicators that are required by the current guidance are appropriate, especially given that the fact that even governments that have such indicators or are in the condition that those indicators would tell us they are in, very few of them actually cease to exist. And of course, going concern uncertainties seems to imply that this is only an issue if there's actually a risk of governments shutting down. And what criteria would be a better way to achieve the information that we want to tell readers of financial statements about severe financial stress? So just some quick findings, right? First of all, with regard to going concern, the idea that governments might go out of business because of financial stress. So first of all, there are many states in which governments simply can't file for bankruptcy. Right, that's not an option. Some states also prohibit governments from dissolving unless there has been some arrangement, right, to transfer responsibilities for providing services so that citizens don't have services that disappear immediately. And when local governments are allowed by states to file for Chapter 9 bankruptcy, that's the section of the federal bankruptcy law that applies to municipalities like cities, counties, school districts, etc., right? And allows them to restructure their debt, but doesn't require them to liquidate assets. It's really more about having them negotiate with their creditors to restructure the debt so that ultimately the government will be able to continue to provide services. Even when they do seek Chapter 9 bankruptcy, they generally continue to exist as the same legal entity. A couple of numbers just to help us understand the scale, right? They identified only 318 going concern opinions, right, for all the submissions to the Federal Audit Clearinghouse in the period between 1996 and 2013. So if we assume there are about 90,000 state and local governments in the United States at this time, you can see that's less than 1%. It's actually 0.15%. Very low rate. And the most common reasons that were given for the continuing going concern opinions, basically that's an opinion that the entity may not be a going concern, right, was deficiency of funds and losses. So it is showing that in most of those cases when governments did have going concern opinions, it was with regard to financial stress. Found that only 321 general purpose governments dissolved in roughly a 10-year period, and only 13 of those were from severe financial stress. So, right, that's similarly about 0.15% that dissolved, but only about 10% of those, or 0.01% of governments actually dissolved as a result of fiscal stress. So the conclusion basically is that the existing guidance is not really sufficiently clear for preparers or auditors to understand what we mean by a going concern issue, because most governments, regardless of how severe their fiscal stress, are just not going to cease to exist. was chapter 1. Chapter 2 is where Gatsby starts laying out their actual views. And they define severe financial stress as a current condition, right? That means the government is only required to assess its financial condition as of the financial statement date, right? They don't have to look forward to see if they think they're going to be in severe financial stress in the future. This is just a point in time. And the board believes that the continued existence of government is an assumption that underlies financial statements. So it does matter if governments are going to be going out of business, right? The probable dissolution, again, is not necessarily that the government is likely to dissolve because it's in financial stress, right? But it just means that there is a probability that the government will actually cease to exist in its existing legal form. The key here is to recognize that these are two distinct concepts. Now, they have some overlap because, as we saw, when entities are ceasing to exist, in some cases, it is, of course, the result of fiscal stress. But that is not necessarily the case. And for the rest of this preliminary views document, it's important to distinguish between the idea of fiscal stress and probable dissolution because they, in many cases, don't overlap. So this is a quote from chapter 3, where Gatsby is essentially defining what it means to be in severe financial stress. They call that the severe financial stress condition. Right? And they say that the board's preliminary views is that a government should make disclosures if it meets the severe financial stress condition as of the financial statement date, and a government that meets that condition for financial reporting purposes does meet that condition for financial reporting purposes if it is experiencing financial stress to such a degree that it is at or near the point of insolvency. So let's talk about what exactly severe financial stress is, right? This is a high level of fiscal stress. And, this slide mostly repeats what was on the prior slide, but it also points out that emphasizes that we're only asked to make this determination as of one point in time at the end of the reporting period, and also exactly what it is that we are assessing. And this is important. This is for the primary government, including its blended component units. There's nothing here about discretely presented component units. Only the primary government, including its blended component units. And you can see that that's also one unit, right? We're not being asked to do each blended component unit separately. We're sort of looking at the primary government as a whole, including those blended component units. So what does it mean to be at the point of insolvency? This is when governments are not paying their bills or are unable to pay their bills as they come due. Near insolvency, of course, is a little bit harder to define, and we're going to see that Gatsby gives us a lot of ideas about how to assess that, but there is no hard and fast rule. This is about governments that are close to the condition of insolvency, but they're not there yet. So what do we mean by near insolvency? Well, first of all, near is a measure of degree. It tells us how much financial stress there is. It's not a measure of time, right? It's not how soon you are going to be financially stressed. It is the degree to which you are financially stressed. And again, this is a high level of financial stress. But like many of the most important decisions we make as preparers and that our auditors make, this is purely a matter of professional judgment. So there are no bright lines. In order to help us make those professional judgments, Gatsby has provided a list of what they consider to be indicators. The list is non-exhaustive, right? It doesn't include everything that could possibly indicate that a government is in stress. Governments could be near insolvency. When they are exhibiting only one or even none of the indicators, right, or many of them, governments might not be near insolvency, even if they are exhibiting one or more of the indicators. So again, these are just things, sort of things to consider more than hard and fast rules. The indicators fall into three groups, and we'll go through each of them in a moment, right? Structural deficiencies, the need to take actions to improve your financial condition, and certain non-compliance or legal issues. So let's look at, our second verification poll is up right now. So please respond and let us know that you are here so we can give you your CPE. So the first group, which actually has the most specific indicators listed, is structural deficiencies, right? So the first one is if we constantly are spending more than we're taking in, right, for many periods in a row, that's an indicator that we might be in severe financial stress. Also, if we have consistent working capital deficiencies, remember, working capital is current assets minus current liabilities. That's a measure of liquidity. So if we are sort of constantly negative there, that also could be an indicator. If we are repeatedly using one-time revenues to balance the budget. So if you think about what is often referred to as structural imbalance, when a government needs to use one-shot or one-time revenues to cover recurring expenses, recurring costs. Also, with regard to short-term borrowing, so short-term borrowing in itself may not have any relationship to financial stress, right? Governments' revenues are often kind of lumpy, and so many governments use short-term borrowing to smooth that out, so they have enough cash to meet, more constant obligations as they come due, even if, for example, they're primarily property tax driven and maybe they only collect property taxes once or twice a year. So the short-term borrowing itself is not an issue, but if there is a constantly growing reliance, that could indicate a problem. More cash is needed earlier, before the big chunk of revenue comes in, and we have to kind of speed up the cash collection because we're sort of, cash is insufficient until much later in the year each year. And then for business type activities, the idea that that there might be recurring periods in which the operating income or loss plus non-capital subsidies is negative. And I just want to point out, this is actually a new subtotal that is going to be included on proprietary fund and business type activity financial statements based on GASB Statement 103. And this is actually a pretty good indicator, because this includes everything that a business type operation generates for itself, right? Plus the kinds of subsidies it gets that are intended to cover recurring costs. So that's a pretty good measure about how well they're doing covering their recurring costs. The second group is where governments need to take action to improve their financial condition, right? Things are bad and you have to take certain actions. Just having to take those actions may mean that you are in severe financial stress. So if you have to cut services, if you have to find new sources for financing, if you have to sell assets, or if you have to restructure your debt. And it's key here, the need to take those actions. It doesn't say that by taking those actions you have indicators. It's that you need to do that in order to improve your financial condition, right? Governments increase and reduce different services all the time that may or may not have anything to do with financial stress. And the same thing with selling assets and restructuring debt, or constantly looking for new sources of revenue. The last group is where you see things that are a little bit more shocking sometimes, like default on certain bonds, not being able to meet certain obligations as they come due, like to your vendors and your employees, right? If you can't make payroll, that might be a pretty good indicator that there's a problem. Non-compliance with debt service reserve requirements, right? If you are supposed to have a certain amount of money in a debt service reserve, but you need to spend it to make debt service payments, then that might also be a pretty good indicator, and certain types of legal proceedings. I just wanted to point out here that all of these indicators, right, in all three of these groups, these are all what I would call, positive indicators, meaning that if you have those conditions, then there is a higher chance that you are actually in severe financial stress. It's a little bit of a contrast when we look at chapter 5, it'll be a little bit different. So just some general considerations when you're looking at these factors or indicators, right? First of all, again, the timing. If you have met one or more of these indicators at some point during the year, but you have resolved it by the end of the year, then that may not be a strong indication that you are experiencing severe financial stress at the end of the year, which again is when we have to measure it. So, if you had to do a debt restructuring during the year, but you successfully restructured and now you're able to meet your debt service and your other obligations, then maybe you have dealt with the issue and you don't have a condition of severe financial stress. There's also the idea that there's an interrelationship, right? The more indicators present, the greater chance there is that you actually are in severe financial stress, right? So, if you have to increase your short-term borrowings at the same time that you need to draw down on debt service reserves, right? Those two together would would more likely indicate a problem than either of them separately. Also, the severity of the indicator. So, if we said that having a constant negative working capital is an indicator, well, if you have a very small negative working capital, right, then that is not very severe. So that would make that indicator, a little bit less strong in terms of pushing you over the edge as to whether you are, in fact, in severe financial stress. Okay, so chapter 3 told us how to assess whether or not we are actually in financial stress. Chapter 4 is going to tell us what we need to do, or what GASB is proposing. I should have said that up front, right? All of these are just proposals, and they're not even firm proposals yet. They're not in an exposure draft. They're just in a preliminary review document. We still have time to try and influence it. Right? Don't just complain about GASB standards when they fall upon you. If you get engaged actively in due process, then you have a chance to actually make those standards more workable for us as preparers, auditors, etc. So chapter 4 tells us, well, if we meet that severe financial stress, if we're in that condition, what we would need to disclose to the financial statement users. And basically it is, the reason that the condition exists, the government's evaluation of the significance of each of those individually, the actions that have been already taken by the government prior to the date the financial statements are issued, and the known effects of the severe financial stress condition, such as have credit ratings already been downgrading, or has the state already stepped in to help a local government. The level of detail that we need here is that the disclosure should be made for the primary government, including its blended component units. Notice that's a distinction, right? When we talked about severe financial stress, while we're talking about severe financial stress, we're talking about a government looking at a whole. But that's going to be a big difference when we talk about probable disclosure. We're not just looking at one, we'll be looking at things individually. So severe financial stress, we're looking at just kind of one entity, and that is the primary government, including its blended component units. If a government has disclosed, if it's met the requirements, if it's in the condition of severe financial stress in 1 year, what has to happen in the next year? Well, GASB says, either you're still in severe financial stress, so you will update the information to be current in the next year's financial statements, or you are no longer in severe financial stress, in which case you should tell readers how you got out of it, right? What happened? Don't leave them hanging. Chapter 5, this is where we're switching from severe financial stress to this evaluation of the probability of a government dissolving. This is, again, a quote right from the chapter. It says, the board's preliminary view is that a government should make probable dissolution disclosures if it is probable that the government will cease to exist as the same legally separate entity within 12 months of the date that the financial statements are available to be issued. So I just want to point out a couple of things here about this 12 months, right? First of all, this is reflecting a new timeline that GASB has proposed for subsequent events. Current guideline is within 12 months from the statement date or shortly thereafter, for example, 3 months. GASB has proposed in an exposure draft on subsequent events to change that period and to be 12 months from the date the financial statements are available to be issued. So that basically means when everything's been approved, everything's finalized, the auditors have signed off, if there's any approvals necessary by either the governing body or even a higher level of government. In certain cases, I believe states need to approve local financial statements before they get issued, right? All of the approvals that need to happen have happened. That is the date on which they are available to be issued. Whether or not that's the same date that you make, hard copies available or posted on your website, it doesn't matter. That's the date when they're available. So that is the proposal for subsequent events period, and GASB is putting it in here as part of this proposal as well, I think on the assumption that they will move that way with subsequent events. Note that this is also a distinction from severe financial stress. For severe financial stress, we were only looking as of the fiscal year end or the period end. Now we have to sort of look or project a little bit out for a year beyond the date that the financial statements are available to be issued. So basically this time frame could be longer. Let's look a little bit at some of the language here and what exactly we mean. Cease to exist as the same legal entity, right? This can be, aligned with mergers and acquisitions, right? If there are combinations or disposals of operations. Dissolution without replacement would be if a government simply ceases to exist, right? And there's no transfer of any operations. It's exceedingly rare for general purpose governments to simply cease to exist, as we saw, right? The GASB found only 132 examples over 10 years. And the only examples that I could think of were for special purpose entities in New York City, right? In the 1990s, New York City issued yen-denominated bonds through a financing entity that they set up called the Samurai Funding Corporation. Right? They issued yen-denominated bonds. Once those are all paid off, they dissolved the corporation. They also later, in the aughts somewhere, they set up another financing entity to finance the building of what was essentially a big condo, where one of the 2 condo units was going to be used for state courts, because local governments in New York State are responsible for financing the construction and I think maintenance of the state courts. I also want to point out a slight difference, right, about what is being evaluated. And I mentioned this before. With severe financial stress, we were looking at the primary government, including its blended component units. For probable dissolution, we are told we need to look separately for the primary government and each blended component unit. Why? Why wouldn't it be the same? Well, this is about things that cease to exist as legal entities. Blended component units are separate legal entities. And so you can only make this analysis about a legal entity. And so you have to do it separately for the primary government and the blended components. What are some of the ways that we can determine if in fact it is probable that the government will dissolve? So similar to the indicators that GASB gave us in Chapter 3, they give us some indicators here in Chapter 5 for probable dissolution compared to the ones that they gave us for severe financial stress. And they fall into general categories again: operational inefficiencies, fiscal stress, if the stress can lead to the dissolution of the government, dissolution actions that have actually been taken, and also any plans to alleviate, operational inefficiencies or financial stress, or to block dissolution actions. So let's look at these 4 categories. The first one is the operational inefficiencies. So, if there is duplication of efforts with other governments that could be resolved through a merger or acquisition, right, that may make it probable that it'll happen. If there are unfilled appointed and elected positions due to lack of citizen participation, that would be a pretty glaring indicator. Also, if we are trying to maintain infrastructure for a population that has dwindled. We've seen this in some old Rust Belt towns. The idea that we used to have more manufacturing in many areas of this country, and when the manufacturers and therefore the jobs left, very often there's a very large decline in population. And so, there may be a huge road network, there may be water and sewer and electrical infrastructure that is just not necessary and probably can't afford to be maintained by the smaller population. There's fiscal stress, which kind of ties back to what we talked about before about the financial stress condition. So if you meet the condition, or if you have filed for bankruptcy, right, and there is the possibility that those could actually lead to the government dissolving, then those would be indicators. This is our 3rd verification poll. You must do at least 3 to get CPE, so please answer this one. Tell us you're here, so you can actually get your continuing professional education credits. This is where there has actually been actions taken toward dissolution. So if the government is actively looking to dissolve, if similar governments recently dissolved, if there are merger or acquisition negotiations actually ongoing, if there has been initiation, if we've started legal proceedings to dissolve the government. The last of the 4 are actually negative indicators, right? These are things that would sort of outweigh or counterbalance the factors that we had in the first 3 categories. That would be if we are taking actions and have plans to alleviate operational inefficiencies or fiscal stress, right? We're going to try and rectify that situation. Or if we have taken action to block legal proceedings that would require us to dissolve. Chapter 6 is the last of our chapters, and just like Chapter 4 told us what we had to do in terms of disclosures if we were in severe financial stress, this tells us what GASB is proposing that we would have to do if dissolution is probable. So the board's preliminary view, right, is that the following disclosures should be made if dissolution is probable, avoiding unnecessary duplication if the government also meets severe financial stress conditions. So a lot of these may overlap. If you have both severe financial stress and there's a chance that it might actually lead to your dissolving the government, right? You have to actually say that dissolution is probable, say why that is, giving all of the reasons, and also indicate how much significance that you attribute to each of those reasons, what the government has already done to reduce, or I guess perhaps could embrace, right, to the probability of dissolution, and what happens to the assets if the government does dissolve, kind of like that liquidation accounting I mentioned earlier. The fourth bullet here, actions taken by the government in response to the probable dissolution prior to the date financial statements are available to be issued, that actually kind of mirrors a little bit what we saw in the risk disclosure, GASB Statement 102, right, where governments were asked to talk about what they had already done to reduce those risks. And in fact, if they had actually done enough, right, that meant that there was no need to have the risk disclosures because they had mitigated sufficiently. That would be the same here, right? If the government has actually taken sufficient actions that already make it clear that it is not likely to dissolve, then you wouldn't actually have any disclosure to begin with. Again, with regard to prior periods, right, we're going to have to look and say, is there still a high probability of dissolution? If so, update the information. And if not, what have we done that changed the situation so it's no longer probable? All right. As I said before, this is a great opportunity to give GASB feedback. And since you're here for CPE, and you've learned a little bit about this, you may really want to take the opportunity to give GASB feedback to help them craft this and hopefully shape it into something that we can all live with and we can all accomplish at reasonable cost, and that would provide reasonable information to the users of our financial statements. So the deadline for providing feedback is the end of June of this year. So you still have a good bit of time. It's only the middle of April, a month and a half. Also, GASB is accepting sort of traditional comment letters by email. And also, within the last year, or maybe a little more, 2 years now, they have started accepting electronic input forms. So you don't actually have to write a whole formal letter. You could go onto their website and sort of fill in a form, give a little information about you. And then this is an example that I have cut and paste from their screen for one of the questions. This is sort of the first question. It's very general. Simply say what you like and don't like and why. If you want to, you can continue to go on to proceed to questions and spaces for your answers about individual chapters, pretty much asking the same question, right? What do you like and what don't you like, but about the chapters individually. There's an option right in there to sort of click if you would like to participate in any of their public forums. So GASB they actually have proposed quite a number of opportunities for people to give them feedback live. And this is particularly valuable, I must say. If you feel like you have input to give, consider not just giving them written comments, but also either virtually or in person, giving them some testimony and discussion at these public forums. This gives the board members and the staff an opportunity to ask you questions about your views, right? One, to make sure that they understand exactly what you said in your response letter or in your online submission, but also a chance for them to ask you about things you might not have chosen to respond to, but that other people may have, and they'd like your opinion on those too. So, I know the idea of making a presentation in front of GASB may be a little intimidating the first time you do it, but Susanna has dealt with GASB for a long time. I've dealt with GASB for a long time. They're just humans, and they are smart humans, and the staff is very impressive, but it's not terribly intimidating, and they're always polite. So it's worth doing some testimony if you want to. And you can see that they are doing some in a couple of different places around the country. And of course, they always do virtual ones that you can just call into, if you will, and give them your testimony. And like on Zoom, I don't remember if it's actually Zoom, but you'll have the opportunity to give them testimony. They'll have the opportunity to ask you questions, and you can answer. Or if you don't know the answer, you don't have an answer, just say you don't have one. All right. So this is your opportunity to ask any questions. Susanna, I don't know if you have gotten any questions that you would like to share.
We have gotten just 3 questions from the same person. Thanks for the participation.
Excellent.
If you're sitting back here, post a question. We have some time to go through them. The first question that I think is super relevant.
Wait 1 second. The verification poll just came up. So this is your fourth and probably final opportunity to tell us that you are here. All right, Susanna, back to you.
So what we're talking about today is proposed guidance. We're in preliminary review stage, still a long workup to go. But the question was, could this overlap with Statement 102 and the determination and identification of concentrations and constraints, which we know is final guidance for us and would require potentially the triggering of a disclosure? Had there been discussions on that as well?
Actually, it's covered in the preliminary reviews document. They do address the fact that there are, other disclosures about risk factors. And I forgot to say that in both Chapter 3 and Chapter 5, where they talk about the indicators that they're suggesting you consider, they also talk about other potential indicators that they considered and then decided not to include on the list. And for at least some of them, the reason that they chose not to include them in the list is because they felt that they were already well covered by GASB 102, the certain risk disclosures. And they say, that if they raise to the level of, being severe financial stress, or if they raise to the level of probable dissolution, right, then the existing factors would probably identify them. Would identify those governments that are in severe financial stress as a result of things like concentrations and constraints.
And that would probably be the overarching disclosure would be probable dissolution, severe financial.
Yes. Okay. And actually GASB 102 is very clear that those risk disclosures don't have to be sort of called out as GASB 102 risk disclosures. Mm-hmm. They just need to be disclosed. So to the extent that they relate to probable dissolution or severe financial stress, or to subsequent events, right, or other areas where
debt disclosures already, was one.
Right,
yep. Okay.
Right. Those would just be covered there. You don't have to sort of indicate them again. Good question.
All right. And then just more of an observation of, potential negative impacts or unintended consequences from this disclosure. I think that comment was just maybe a general call for governments to consider the impact that this could have on you and potentially relay that impact to GASB through comment letters. Yeah. And that the last one that we have to talk about is, when GASB views comment letters that they receive, does GFOA's, NACUBO's, do those comment letters carry more weight than a local government's comment letter? And I responded back that I think it gets attention when GFOA committees provide comment letters and when large organizations or large active state associations provide comments as well, because the thought is it's coming from a collective of governments and they are in agreement with what is being communicated in that letter. And there's also a relationship, so we have the ability to discuss back and forth. They call, GASB staff could potentially call with follow-up questions on the comment letters, but I know that GASB staff calls local governments on follow-up with their comment letters. And while our comment letters that we submit are public documents, they are posted on GASB.org. We can go in and read old comment letters submitted by various governments and organizations on past projects, and these will be public as well. When GASB's at the deliberation table, deliberating comments, it's not described as GFOA committee responded with this comment, or, the city of Chicago said this. It's provided as large government, population X, or, state association, national association. Those are the types of descriptors used to describe the individual comments that are deliberated by GASB. So I think a thoughtful, specific comment from a local government can have just as much impact as a comment that the GFOA committees are putting together. And Michelle, can you provide a little bit on GFOA's internal process when working with the committees and how they submit their comment letter?
Yeah, so for the most part, the accounting, the GASB guidance comment letters come through the Accounting, Auditing, and Financial Reporting Standing Committee. And those members get together and bring feedback from their individual governments and from others they have talked to, and develop a comment letter. The entire committee will vote to approve it. We also, I think that the feedback that we give to GASB, I agree with Susanna that they do call us and ask questions about it. I will say, however, that I do think that it is really a matter of sort of substance, as she was saying, right? As Susanna was saying, GASB wants to really have good reasons and good understanding about why you think something is a good idea or a bad idea, especially if there's the potential that you have thought of things that they have not, right? They often don't consider all of the perspectives, right, that may, or all the information that may affect. So for example, first of all, GFOA has given GASB feedback, which they have actually taken in some cases. Some cases they don't. But years ago, when derivative instruments, I don't know if anybody remembers that far back, but when derivative instruments guidance was first proposed, they actually proposed that derivative instrument value changes be reported in governmental funds. And a lot of folks vehemently disagreed with that for a lot of reasons, including practicality and the relationship between fund accounting and budgets in many cases. And they walked back on that. We gave some feedback, and other organizations also gave some feedback with regard to what became GASB 102, the certain risk disclosures. The initial exposure draft seemed, in the opinion of many, including GFOA, to be proposing essentially forecasting, like that governments were supposed to sort of guess what was going to happen. And they walked that back a good bit and made that a much more, I think, practical and usable standard. They do really take things into consideration. With regard to compensated absences, GASB 101, which we've been talking about a lot because people are implementing it right now, I think it may have been the AICPA, a different organization pointed out to them that their initial requirements would have technically required governments to parse out of things like salaries payable and payroll taxes payable, right? Liabilities related to used leave that had not yet been paid out, right? So at the end of the fiscal year, usually a fiscal year doesn't end exactly on a payroll date, right? And so you have salaries payable. Well, some of those salaries payable, right? Not everybody worked all 5 days of that final week of the year, right? So somebody took a vacation day, and that vacation day was already in the salaries payable. And as a result of that being pointed out to GASB, they changed GASB 101 to clearly say, compensated absences don't have to all be reported in one place, right? As long as you have recorded the liability, the fact that people already took the leave, right, and that it is now part of your salaries payable and your payroll taxes payable is not a problem. You can leave it there. You don't have to try and parse it out and report it as part of your compensated absence liability. So that kind of a practical issue is especially important. So really think about what you are going to actually have to do to implement this if this were a final statement, and whatever things really are not workable or would be particularly expensive or difficult, right? Those are really important things to tell GASB about during the due process.
And we're early. We're in preliminary reviews. We have a chance here.
Absolutely.
To be heard.
All
right. That's it from the questions. Thanks so much, Michelle.
Thank you so much, Susanna. And thanks to all of you for being here. And we hope this was interesting. And we'll see you at our next quarterly Gaffer Plus update. Take care.
Have a good afternoon.
Recording stopped.